Welcome to The Explainer. You ever look at a chart and just feel like you're guessing? Well, today, we're going to decode the market's secret language. We're talking about a tool that shows you exactly where the smart money is moving.
Okay, take a look at this chart. Just based on these candlesticks, what's the next move? It feels like a total coin flip, right? Are we going to surge higher, or are we about to crash right down? It's anybody's guess.
And you know what? This is the frustrating reality for so many traders. You're out there, you're searching for that reliable edge, but just looking at price action, it can feel completely random, almost unpredictable.
Okay, so what's the missing piece here? Let's really dive into why these traditional charts can sometimes feel like they're leading you astray.
And here it is. This is the key. The big players, the institutions, yeah, they can manipulate price. They can push it around and create all sorts of misleading signals. But what they can't hide so easily is their volume. The sheer size of their trades leaves a footprint, and that is a lot harder to fake.
So the big question is, how do we find this institutional footprint? How do we see what they're doing? Well, it all comes down to shifting our perspective with one really powerful tool.
All right, so on the left, you've got your traditional volume bars. We've all seen these at the bottom of our charts. They're useful. They tell you when the market was active. But look at the right. That's volume profile. It literally flips that idea on its side. Instead of when, it tells you where. At what price was the market most active? This little shift, honestly, it's a complete game changer.
And all of a sudden, you're not just staring at random price wiggles anymore. It's like having X-ray vision. You're actually seeing that institutional footprint. You can pinpoint the exact levels where the biggest market battles were fought.
Okay, so we have this powerful new map. How in the world do we read it? Let's break down the key landmarks you need to know. Think of it as learning to navigate the market like a pro.
First up, we've got the point of control, or you'll hear it called the POC. It's super simple. It's the single price level where the most volume was traded. Think of it as the market's center of gravity for that session. It's magnetic. It's where institutions place their biggest bets.
All right, next is the value area. This is basically the institutional comfort zone. It's the price range where about 70% of all the volume happened. So if the POC is the capital city, the value area is like the core territory around it. And believe me, they will actively defend this zone.
Now, this is where it gets really interesting. Think of the volume profile as showing you the terrain of the market. The high volume nodes, these big bulges, they're like thick forests. Price really struggles to move through them. They're natural support and resistance. But the low volume nodes, those are wide open fields. Price tends to just sprint right through those areas with almost no opposition.
Okay, so this is all great information, but how do we actually trade with it? Let's build a real actionable strategy based on what we now know about institutional behavior.
Here's the playbook. It's a simple three-step process. Step 1, spot the point of control. Just find that widest part of the histogram. Step 2, wait. You got to be patient and let the price move significantly away from it. Then, step 3, this is where you act. You trade the very first time price comes back to retest that critical zone. That's it.
So let's look at a bullish setup. Price forms a nice, clear POC. It moves up, and then it pulls back. That first touch, that's your signal to go long. And why? Because you can bet the institutions who created all that volume are stepping right back in to defend their positions, and that's what drives the price back up.
And for a bearish scenario, it's the exact same logic, just flipped. Price drops away from the POC, it rallies back up, and that first touch is your cue to enter a short position. You're essentially trading alongside those big original sellers as they defend their territory from above.
All right, now for a pro tip. This is a small adjustment to the strategy, but trust me, it can save you from a ton of frustration and make this whole thing even more powerful.
I'm sure this has happened to you. You see the setup, you're waiting patiently for price to hit that exact point of control line for your entry, and then it reverses just a few ticks away, leaving you watching a profitable move from the sidelines. It's so frustrating. So what's really going on?
Here's the breakthrough. Institutions, they don't defend a single razor-thin line. They defend zones. That entire cluster of high volume you see, that whole thing is their defensive perimeter. It's not a line, it's a fortress. So look at the difference here. The conventional method has you waiting for that exact POC line, and yeah, you often get left behind. But with the zone method, you're looking to enter at the edge of that high volume zone. This way you capture that initial institutional reaction. You're getting in right as the defense begins, not waiting for the battle to be in full swing.
Okay, strategy is only half the battle, right? It is absolutely useless if you don't have a rock-solid plan to manage your risk. So let's lock in the rules that are going to protect your capital.
The rules are simple, but they are absolutely crucial. For your stop loss, you place it behind that entire heavy volume zone. Think about it. If the price breaks through that whole institutional fortress, the reason for your trade is gone. It's invalid. And for your take profit, you place it before the next heavy volume zone. Take your profits before price hits the next potential wall. These two rules, they're non-negotiable.
So let's bring it all together. By shifting your focus from just watching price to actually reading the volume behind it, you're not just guessing anymore. You're starting to see the market's true intentions. You're reading the institutional footprint. You have the map. The only question left is, where will you step next?